If you're asking me, do I think Bitcoin will get to $200,000 by the end of the year? What I've said is no. I think it will trade to new all-time highs by the end of the year. So I think
Okay.
we will cycle through this bearish market. And then I think the institutional demand and end of year window dressing will push Bitcoin back to new all-time highs. I think we'll be reimagined as a bull market again before the end of the year. But it would take an extraordinary trade to get us all the way to 200,000. I think we'll end up shy of that. But I do think we're gonna bottom out from a sentiment perspective and accelerate into the end of the year. And I think new all-time highs in 2025 are still in store.
As Bitcoin hovers near the $100,000 mark, market strategist Matt Hougan believes the next breakout won't come from hype, but from patience, policy clarity, and institutional conviction. Matt Hougan, Chief Investment Officer of Bitwise Asset Management, presents a measured yet optimistic outlook on Bitcoin and the broader crypto market. His perspective reflects a maturing ecosystem still working through the aftermath of recent deleveraging cycles. Hougan's view that retail investors remain on the sidelines due to lingering fears of hidden risks, from hacks to institutional losses, underscores the cautious sentiment still gripping the market. His belief that stability or a final resolution could mark a sentiment bottom aligns with the idea that Bitcoin often finds strength in uncertainty's exhaustion rather than in euphoria. From an analytical standpoint, Haugen's emphasis on macro and policy catalysts feels well-grounded. The potential progress of the Clarity Act and rising expectations of Federal Reserve rate cuts could indeed serve as meaningful tailwinds for Bitcoin, especially as liquidity conditions improve. His cautious optimism, expecting new all-time highs but stopping short of the $200,000 mark, shows a disciplined realism that differentiates him from more speculative forecasters. Interestingly, his comments on institutional appetite, evidenced by the explosive success of Bitwise Solana ETF, hint at a broader trend: capital rotation within digital assets. As Bitcoin's $8.8 billion in year-end options loom, Haugen's framework suggests that while retail hesitates, institutional conviction may quietly be setting the stage for Bitcoin's next breakout. Do you agree with Matt Hougan's cautious optimism on Bitcoin's next move? Drop your thoughts in the comments below, and don't forget to like, share, and subscribe for more expert crypto insights.
I think the thing that people are worried about, particularly on the retail side, is whether there are more bodies to surface from the big deleveraging washout and sort of the concerns around vaults and hacks that we've seen recently. I think either a major body surfacing so people can get that out of their system, or the passage of time, let's say 4 weeks with no major hacks or no major other issues, will help us sort of clear that out of the system. One reason I think crypto retail is on the sidelines is that they're not sure that that process of figuring out what happened during that deleveraging process and whether there were major institutions that were harmed, I think that is continuing. So if we can resolve that one way or the other, I think that would be sort of the bottom of sentiment and the opportunity to rebuild. The other opportunities that I see for sort of positive catalysts is, I think, progress on the Clarity Act in Congress, or rising expectations that we're going to have progress on the Clarity Act, is a upside surprise that's coming to the market, and I think could give us a reason to rally. Similarly, I think if the market starts pricing in the probability of more rate cuts, if we sort of peel backwards from the hawkish tilt we heard from the Fed at the last press release, I think that could give a bid to a market. So whether it's rate cut expectations, Clarity Act, or just retail getting past their worries that we haven't seen all the downstream effects of that giant deleveraging we had, I think those are the things that would sort of signal the bottom and start to push us upwards until the end of the year. Yeah, we were really excited to bring BSOL to market as the first spot Solana ETF with 100% of assets staked, chasing after that full 7% plus yield. And as you mentioned, the response has been incredible. It's the fastest growing new ETF launch of 2025 across all ETFs. There's been 850 plus ETFs launched. It's the most in any year in history. And BSOL out there is number one by trading volume and going to get there to be number one by total inflows. And we see buying, each of the first 6 or 7 days. I think that will continue. What it means is there is institutional appetite for high quality crypto assets that's still pent up and needs to be released. I think it gives a very bullish signal on, there we go, such a great event at the New York Stock Exchange, a little bit of a Trojan horse event, bringing the future of how markets are traded to ring the bell at the place where they're currently traded. But it was wonderful to see the Solana community come out for BSOL. I think they were very excited. And look, I think that's going to get billions of dollars of flows. It's one of the most exciting crypto projects. Investors are under allocated to it from a traditional market side. And I think they're going to correct that in the next 6 to 12 months. Yeah, look, I think the expectation around an alt season should be one of differentiated returns. I think the era where alts all rose together and any alt was a good alt and the more risky, the better during bull market blowoffs is no longer the case. And I think you can see a little bit of this in the relative flows we're seeing between, let's say, the new Solana ETP and the new Litecoin ETP, right? People are differentiating on what they're more excited about. And I think that will be true going forward. We're going to see a lot more quote unquote altcoin ETPs. Some of them will do exceptionally well. And I think they'll be driven by strong community interest and strong fundamentals. And some of them, I think, will fall completely flat. I think we're just going to see a broader dispersion of returns in alternative assets as we move from the speculative phase of crypto to a more fundamentally driven phase of crypto, from the retail driven phase to the institutional phase. I think that means more distribution, more differentiation, and an era where fundamentals matter more than they did in the past.
If you look at Matt Hougan's take on Bitcoin, it's clear that this cycle won't resemble the explosive rallies we've seen in the past. His comparison to early tech IPOs, like Facebook, is insightful. Just as those stocks took time to recover before delivering massive gains, Bitcoin's current phase seems to require patience. Haugen's observation that retail investors are gradually exiting while institutional players step in highlights a critical rotation in the market. From an analytical perspective, this handoff could set the stage for a steadier, more sustainable growth pattern, rather than the dramatic spikes typical of previous cycles. Considering his point that Bitcoin is in the third inning of its development, with Ethereum and Solana even earlier, it's reasonable to think long-term investors who maintain discipline and proper portfolio allocation may benefit from this slow grind upward. Haugen's argument that the traditional four-year cycle is effectively over is also noteworthy. Halvings, interest rate shifts, and historical blow-ups no longer dominate market behavior. Instead, a longer, institutional-driven cycle may emerge over the next 5 to 10 years. The current $100,000 range, which many see as a plateau, could actually be a strategic accumulation window. His focus on emerging sectors like DeFi, prediction markets, and creator economy applications suggests that Bitcoin's evolution is part of a broader market phase shift, one where innovation and institutional involvement drive sustainable upside. Let's get back to the interview.
Look, I think this cycle will be different. I think it will be slower and grindier, but still a lot of significant upside. To make that comparison between sort of retail OG investors rotating out and institutions rotating in, you could give the example of like tech stock IPOs. Jordy Visser wrote a great piece about this. You could look at Facebook's IPO. Facebook IPO'd at $38 and then traded down for 15 months before it got back to $38. Today it's at 635. What does that tell you? It tells you once you work through this distribution phase where the early insiders sell to some of the institutions, there can be enormous amounts of upside for those that hold to the other side. So I would, my word to retail investors is like we're at inning like 3 of Bitcoin's growth. We're at inning 1 or 2 on ETH and Solana. We're in the pregame for some of the other more interesting alt assets. There is still a lot to go after this handoff. It's just going to be different than it was in the past. It's going to, I think, look more like a ladder and less like a trampoline. But that can be great for your portfolios as long as you have the right time horizon and as long as you have the right portfolio sizing. You can. There's still a lot to go. It's just maybe less volatile than it was in the past. I think the reasons we had the 4-year cycle are just no longer as relevant, right? The halving is half as important as it was 4 years ago. Interest rates are going down. They went up in 2022. They went up in 2018. So they're working in a different orientation. Blow up risk is lower this time around than it was in 2022 with FTX, in 2018 with ICOs, in 2014 with Mt. Gox. So the reasons we historically had those resets on a quadrennial basis are just either inverse or no longer very relevant. At the same time, you have this institutional bid. If anything, I think we've already done the 4-year cycle. We've already hit the bottom or near the bottom of retail sentiment. We've maybe speed run through the bear market and we're ready for this new institutional phase. But more than anything, I just think we're in for a slower churn upwards. And as institutional demand progressively moves into the market, I think that is the dominant theme. And that's like its own 5 to 10 year cycle. And I think that's what we're going to be in. Of course, there's volatility. We're living through it now, right? We're off from 125K to 100K, but we're still at 100K. I think 100K, don't look past the simple fact that 100K is a big round number. And people like to sell around big round numbers. I think once we get past the people wanting to sell around 100K, then we're going to see the market going up. Look, we're in a market right now where the market aggressively punishes bad news and ignores good news. And that's a classic bear market. Eventually, we'll get to the point where the market is sort of numb to bad news. You'll see bad news happen and the market will trade sideways. You'll see the market start to reward on the margin good pieces of news in crypto. That's the moment that you know the cycle has switched. And maybe we start to run away from this 100K number. Again, I want to emphasize that from my perspective, I've come to view this sideways chop as a gift and not a challenge because it is giving us the opportunity to build up positions. I think going forward, people's allocation to crypto will be larger than it is smaller. I don't think this is the death knell. I just think it's a phase shift in crypto and ultimately it resolves to the upside. Yeah, the first DeFi index fund, the first NFT index fund. I love what you're doing on the creator side of the economy. I think that will be an emergent market. I think a mistake many investors make is ideas that sort of bubbled up over the last 5 years but didn't reach escape velocity, assuming that they're DOA. I suspect just the timing wasn't quite right, and those will all be interesting and exciting. So I'm personally spending a lot of time thinking about the DeFi area. As I mentioned, I bet there's a new generation of assets that is very interesting in that space. Mm-hmm. I think there's still growth in prediction markets that is underweighted by the market and new applications there. I think what you're doing on the creator side of the economy is interesting. I wouldn't be surprised at all to see a DePIN renaissance with new tokenomics that are more favorable and more securities-like under this new regulatory climate. Changes in regulation create entire new fields for entrepreneurs, and people who assume we're the end of that and no new ideas can emerge. It's just all Bitcoin and layer ones. I think they're going to miss, like, if you're bored with Bitcoin because it's not offering the 1000x returns. I do think there will be those 1000x opportunities, but they'll be in these smaller sectors that are now overlooked by the market because maybe they didn't run in 2021. Yeah. But under new regulation and with new sort of fast throughput, low cost blockchains, I think they have the opportunity to really accelerate. So I'm thinking a lot about those areas and what are the most interesting to explore from a Bitwise perspective.
Looking at the current Bitcoin landscape, it's clear that the market is undergoing a structural shift. The sideways consolidation around the $94,000 to $100,000 range is more than a pause. It reflects a critical juncture where retail influence is waning and institutional participation is steadily increasing. From an analytical standpoint, this rotation suggests that volatility may be muted compared to previous cycles, but the potential for long-term upside remains substantial. Regulatory developments and emerging sectors like DeFi, prediction markets, and the creator economy add additional layers of growth opportunity beyond Bitcoin itself. For investors with a disciplined approach and appropriate portfolio sizing, these levels present a strategic window to accumulate positions. The market appears to be maturing, moving toward a fundamentals-driven phase where sustainable gains are likely to outweigh short-term speculative spikes, emphasizing patience and calculated exposure. Do you see Bitcoin's current consolidation as a strategic opportunity or just market noise? Share your thoughts in the comments, and don't forget to like, share, and subscribe for more in-depth crypto analysis.